seem to understand. I'm not locked in here with you. You're locked in here with me.
Hello, everyone. Welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please don't hold that against me. Here we are once again. We're kind of continuing along that train we started last week with goals, achieving your goals, setting your goals, making time for your goals, figuring out what your goals should be, and then fleshing out the path, the step-by-step process to achieving them. And we are translating that into specific real estate things. So hopefully this will be valuable to you. We talked about this on yesterday, on Monday, and sort of eased into an overview of the different things that you can do. And I happened to mention that I sort of took a step back and really took a look at my marketplace, and it's maybe something you should do too. In fact, I'll go so far as to say not maybe. I think it's probably an exceptionally good idea for you to take a step back and evaluate your local marketplace to figure out where the greatest opportunities are. And just to sort of quickly recap what I mentioned in the last show, I stopped focusing on the stuff we've talked about before, like going with property types that are less searched, like 2-bedroom homes, for instance. I've mentioned that as a strategy, and I really stepped back and I looked for the places with the least amount of competition. Where are the least number of folks out there elbowing for a position? And I came down on vacant properties that could be developed on. And, the reality is that these properties are on the market for an exceptionally long time. All the properties that currently come up in my search, I think the shortest amount of time that I saw one of the properties on was 222 days. Over the last couple of months, I've seen properties that had been on the market for over 1,000 days. So it's one of those areas where you've got room to maneuver. There aren't an awful lot of other people doing this, and the potential payoff can be big. But I wanted to make sure and make clear that it's not a guarantee. Just like with all things, if you don't do your homework on the front end, it ends up costing you at the end. So you really make your money before you ever even make that offer, or at least you determine you kind of set the foundation for whether or not you're going to make money based on how you buy the property. So I have 3 example properties that I've been looking at, and each one of them lends themselves to a different kind of potential payoff for you as someone who might be looking for a property to buy. And it depends on what your goal is. Now, if your goal is to get yourself a single-family residential home that is more bang for your buck, in other words, you're still spending money, but you're getting more house. You couldn't get the same house for that price. You're getting way more house. Or your strategy might be, I want to buy a house and I want to turn around and sell it immediately. Or I want to buy a property, build a house, and then sell it immediately. Or you might want to buy a lot, build a home, and then rent it. Or you might want to buy one, build it, move into it with the plan of down the road a few years turning it into a rental. So part of your thought process needs to be, would it be an effective rental? Now, and your strategy absolutely needs to be sort of fleshed out, or you need to be flexible enough to be able to analyze these properties and say, well, this one lends itself to this strategy and this one lends itself to a different strategy. Now, of course, the very first step is going to be to get access to these properties and information about them. And so finding yourself a good partner in the form of a real estate agent is probably going to be a good way to go. You can search for lots and land using tools like Realtor.com. But the information you're going to need is going to require you contacting real estate folks anyway. So my feeling is better for you to establish a relationship with a real estate agent and just work with that person and have them fetch the info you need than kind of go off on your own and be handing out your contact info to 10 different agents over the course of the weeks that you'll be getting info on 10 different lots or however many different properties you look into. And also, the bottom line is there's really no downside for you to establish a relationship with a real estate agent. I know that that a lot of folks are concerned that then they'll end up on a mail list and they'll constantly be getting pinged. And while that is always a possibility, you simply communicate honestly with the agent and let them know, listen, I'm not interested in getting a lot of stuff. I'm just interested in potentially acquiring these properties. So, and they don't expect you to pay them until you buy something. So there is no cost to you for any of these services, and what you're going to get is going to be important because your agent can provide a variety of things. Without even contacting the seller, they can pull up tax records. They can find out what the person who bought it originally paid for it. They can find out the name of the owner and figure out whether or not it's an individual or whether it's a investment company of some kind. And so you can suss out a lot of details just by having that real estate person on the payroll, so to speak, for free, and just let them know, what you need. I'm analyzing this property. I need you to give me all the information you have, and they'll be able to send you a PDF file with the plot map and the history of the property and all of that great stuff. And that can literally happen in the course of minutes from the time you send them an email with the address or the APN number of the property. They can absolutely, or the MLS number, right? Because if you're working with them, they're going to be able to see the MLS listing for it and then can get the parcel number from that listing and get the more detailed information that you need. So it's really a great relationship. It's very strategic for you, and it also provides you with the information you're going to need to make the kind of evaluations that we're going to talk about here in a minute. Now, there are 3 different properties currently in my hopper that I'm considering. And this show, there's so much different information we could cover. Now, the first thing, I'm wondering what we should cover first, whether it should be about analyzing these properties or talking about construction loans, because I know that's a very intimidating subject for a lot of folks, but it doesn't need to be. Now, as I mentioned, I am interested in pursuing this simply because it seems like the most cost-effective way. This is usually not the most cost-effective way to acquire properties at the lowest end of the spectrum in terms of price. But again, your evaluation of the property is going to determine what makes sense. And obviously, these numbers all shift depending on the market you live in. You may live in a market where the average home price is $200,000. Well, I live in an area where the average home price is about $750,000 to $800,000. So the numbers I'm going to throw around are going to sound intimidating to you, but if you adjust it for what your local markets are like, that's absolutely applicable. The techniques are, just the numbers are going to sound crazy because of what goes on in the area where I live. Now, to give you an idea, the reason why I wanted to focus on these 3 properties is because they're absolutely representative of 3 very different property types and locations, that type of thing. Now, the first property is a downtown property. It's about an 8,000 square foot lot. It's in an area that tends to be below average price. It's got a good location for commuting and being available to downtown amenities, that sort of thing, walking distance to a local school. So a lot of things going for it if the urban thing is what you're looking for. It's going to have sewer right there in the street. It's going to have water right there in the street. It's going to have electricity, gas, everything that you're going to want in terms of all the services coming to the property. Now, that's property number 1. Property number 2 is a 4-acre property that is far more rural. You'd need to dig a well. You'd need to have a septic system installed into the property. You would have electricity at the street, but that's really the only service that's going to be coming to the property. I believe electricity and I think phone is there, and I believe there's also internet service available. So, but again, it's just an empty lot. And the third property is a 10-acre property. It's on the top of a hill. And it also has most amenities coming to the street with the exception of water, I believe. So, and I don't think sewer. Or it's the other, maybe it does have water, but it doesn't have sewer. So you'd have to have a septic system, but you'd be able to work off of city water. So these are all very different, and they all represent very different kinds of opportunities. What's very interesting is that they're relatively close in terms of price to one another. Which is one reason why you need to analyze what your endpoint is and have a pretty good understanding of what sort of an opportunity is presented. Now, after going through some of these numbers, the 4-acre property would be the best candidate for a quick turnaround where you buy a lot, build the home, and then sell it quickly. Why? Well, the average price in that particular area tends to be anywhere from about $900,000 up to $1.1 million. And given its location and what you would put on it and what I would put on it, I would guess I would probably get away with about $990,000 to $1 million for that property, which would be about a $400,000 profit after taking into account all of my expenses. The 7,000 square foot home the 7,000 to 8,000 square foot lot is more urban, presents less costs in terms of what I have to do because I don't have to dig a well. I don't have to put in a septic system. I can probably negotiate the price down on that. It also doesn't fit exactly with what I want because there aren't really any other 4-bedroom homes in that neighborhood. It tends to be a 3 or 2-bedroom home type community. And the prices aren't that high. So once everything is said and done, I could probably get out of there about breaking even, but the property lends itself more to being a great rental. Rental rates tend to be fantastic in that area when compared to the cost of the homes. And because of its location, and because I'd have a brand new home that I'd be offering for rent, I'd be able to rent at a premium in that particular area. So that property tends to lend itself more towards a rental strategy. Now, the 10-acre property, it's further south. The amount of and it also has the added complication of there being a homeowners association involved that can have an influence on what floor plan, what gets approved to get built on your property. So those are other things to take into account. So two kind of extremes at either end. One would clearly be a better rental opportunity. One would clearly be a better sale opportunity. And the one in the middle, that 10-acre one, it's a little further out. Commute is a little bit more complicated, not as ideally located. That would probably be more of a buy it to live in it option. And then once you sort of gotten your time period of living in it, maybe turning it into a rental. But it's also far enough out that the rental rate you'd get wouldn't be as aggressive in some areas. So that one's kind of a middle of the road one. You'd probably make your money back plus a pretty good chunk in a resale situation, but you wouldn't make nearly as much as with the 4-acre property. And as far as rent goes, you'd be positive cash flow, but it wouldn't be as aggressive as the cash flow that you'd probably see on the smaller lot that's downtown. So all of those things need to sort of be in the mix for you to decide which direction you want to go. And of course, as I always say, whatever your decisions are, whatever you're pursuing, having passion for what you're doing is going to be critically important to pushing through all of this. Now, and I know I sort of rushed through that, and if there are folks who want to talk more about the process of going through and figuring out what properties are best suited for, it really is just math. There's not quite so much art here. It's figuring out exactly how much it's going to cost you to acquire the lot, build the home, and take care of all the things that you need to take care of. And you need to be totally thorough on this. For instance, the 4-acre property I talked about, it's not just the cost of buying the lot and building the home. The type of home there, the expectation would be that it would be fully landscaped. There'd be a fence around the property. In fact, maybe even a remote control gate at the front. A lot of the homes that are higher end tend to have the gates at the entrance to the property. So those are things you'd want to calculate in. And what I did when I was doing the math on that, I added $100,000 to the expectation of what costs would be to accommodate for that. And I'm reasonably confident that even if that's wrong, I still make an awfully nice return on investment for the amount of work that I end up doing come the end of the deal. All right, so let's and I mention all those just because it's absolutely steps you should go through. We could do a whole show on that, but being halfway through the show, I wanted to spend the second half of the show talking about the construction loan aspect of this, because so many people are afraid of construction loans. It's something that they're concerned about. They're afraid that they won't be able to qualify for it. And the truth is that if you're thinking about getting conventional funding anyway, where you may be putting down 20%, it almost doesn't make sense to not take advantage of the lot build yourself dynamic, particularly if it's a situation where you will end up saving a ton of money by doing so. And let me explain how you're saving money. There's a variety of ways you could potentially save money. You could, in reality, just really save a ton of money, where you build it and you potentially sell it. And I'm not going to suggest you do that up front. You're going to get better financing if it's going to be something you're going to live in when you're done. But if you're looking at something like shopping for homes that cost $500,000, $600,000 already built, and you're finding you're not getting the number of bedrooms or square footage that you want, or you're not getting the quality that you want, by going this route, you're absolutely going to spend about the same amount of money, but get the kind of house that would have cost you $700,000 or $800,000, right? So you're getting more for your money. You're absolutely getting more in line with what you want because you have absolute control over what gets built. Now, of course, the more you change, the more you make it a custom home, the higher the costs are because those changes have to be made. But you talk to these modular builders, and they usually have a pretty good laundry list of homes that are already pre-designed and ready to go, and you can make small changes to them, usually at a lower cost, but you need to do it as early as possible. And of course, they have custom home options that will give you every option you could possibly want. And even under those circumstances, once it's said and done and the place is built, you've absolutely paid far less than you would have paid for that home. But I want to remind you of a few things relating to construction loans. There's a variety of different flavors of them out there. They're a little bit harder to find, but unlike a lot of other areas, and I've talked a lot about how much experience should play into who you pick to be your professional. There's an awful lot of things where, particularly in the world of real estate, where doing a mainstream typical transaction requires less someone with a lot of specific knowledge and more just a get it done mentality, an organized mentality. And since the process is typically fairly well documented, something that they can, even if they encounter something out of the ordinary during the process, the odds are that they're able to deal with it because there's such a plentiful amount of information available within the real estate community on those types of things. But this isn't conventional. This is off the beaten path. You're not going to find tons and tons of resources on this. You'll find some, but not nearly as many as when you are simply using the mainstream method of buying a home. And that, while that may concern you, it actually should make you feel better about the fact you're making this decision. Why? Because you're not following them in the path of every other person who's out there looking for a home. You should be comforted by the fact you're doing it a little bit differently because this is what's making it better for you. The reason why this is a better option, the reason why you're going to make money on this is because so many other buyers choose not to do it. There's a little bit of a fear factor involved, and it shouldn't be cause any more fear than a conventional loan. The bottom line is there's just more steps, and it takes a little bit more effort to get through it. But the end result is you're in your house. So let's go over some of the basics of the construction loan. There are a variety of different flavors of construction loans. I'm going to strongly suggest you go with the single close loan, but we'll talk about that. Now, first, a construction loan is going to require more time and money than a conventional loan. And by more money, that typically means more of a down payment. Now, banks are going to require more documentation for a construction loan, so you are going to have to provide more information than with a typical loan. And a single close loan, which is what I'm going to suggest you go after, will finance the lot and the home and serve as long-term financing. So, and what's great about those, and this is something that my loan guy that I'm talking to told me, is once you are approved at the beginning of the process, and once the process begins, that's when your interest rate is set. So, and the process to get this all done could take 9 months to a year. Well, where are we in terms of what interest rates are likely to do? Over the next year, have we had conversations about the probability of interest rates going up? Yeah. Now, I don't believe they will, just so you know. As I've mentioned before, I don't think any interest rates are going to go up until after the elections next year. But with where we're having this conversation, if this is a process you start anytime in the next 6 months, I think it's great that you're potentially locking in an interest rate because after the election, anytime after November of this year, if you start the process, I think you're in a good place because interest rates are going to go up. They're going to have to go up no matter what, whether the Fed likes it or not. But I don't think it's going to happen before the election. I think that everything that can be done to prevent that will be done. So I think that this particular process actually lends itself very well to the landscape we see relating to potential interest rates. Now, two-step loans, which are the kind I'm going to suggest you do not get, are used to finance the purchase of the lot and construction, and then you refinance with a conventional loan when it's all complete. So there's these, it's a two process thing. It's the getting the lot part, then it's the getting the house built part, and then it all gets converted into a conventional home loan. I don't suggest you do that one. Far more lucrative, far more useful for you to go with a single close. Okay. Now, most banks are going to require 20% down. There are a few that will go below, but it's a little bit more rare. So you need to mentally prepare yourself for that 20% down payment. The equity position is going to be based on the lesser of the cost of acquisition or finished appraised value. Here's another thing that's a little bit odd. The borrower and builder will need to be fully approved by the construction lender. So your lender is not just going to be approving you; they're also going to be approving the builder that you're using. Now, I started this process by already sort of understanding that existed. So I actually have already found a builder I like, and I've already found a bank that has worked with this builder before. So I know that the relationship there is solid, and that's great. So, and that's something you'll want to do too. When you find a builder that you like, ask them for referrals to lenders, and they should be able to turn you on to folks they've worked with in the past. You typically only make interest rate payments, you typically make interest-only payments on the portion of the funds used during construction. So, in other words, if you know this whole thing is going to cost you $500,000 when it's all said and done, you're not paying interest only on a $500,000 loan to start. What happens is there are draws to this amount that you're going to ultimately get loaned. There are draws for the acquisition of the lot. There are draws for different milestones of construction, and the whole process is handled with these draws. So as the money gets put out, you're paying interest-only payments on those outlays of cash to handle the different expenses that are going on during the process. Now, you might be thinking to yourself, "Oh no, I really don't want to do that when I won't have a place to live, but I'll have these additional expenses." If you are a renter when you start this process, once you've acquired the lot, my suggestion would be to rent a trailer and live on the lot in the trailer if you're looking to maximize the payoff. Because all during that time that you're paying interest only on the loan, and the rent that you'd pay for this RV or whatever it is you'd use is going to be less than what you'd be paying for your rent. So your actual net monthly costs are reduced during this process. One reason why I suggest doing that is in case you decide to do any unexpected upgrades or you change your mind somewhere through the process, you're going to have enough of a cash flow situation where it's not going to feel as painful to do that. I know in my particular situation, my goal is I'm planning on doing this while keeping the home I currently live in and renting it. So my goal is once we acquire a property, I get a trailer or an RV on the lot while the construction's going on, and I'm renting this property while that's all happening. So the net result is, just as I described, more positive cash flow in my month-to-month cash situation. So instead of paying more per month, I'm actually saving more per month. Let's see. And then the borrower builder, you're very much in cooperation with your builder in this situation. You take draws as needed to cover materials and labor that gets completed. Most construction lenders will only finance conventional homes. So, this isn't one where you're going to be able to make things out of shipping containers or recycled material homes, converting missile silos, nothing unconventional. The bottom line is that anything off about the construction you're doing represents a higher risk to the lender. What the lender wants is for you to be building something that has the highest probability to appeal to the largest number of people. If you default and they need to sell it, they need to make sure they have the largest number of potential buyers who are willing to get their hands on it. So those are some of the limitations. Now, as before, I'm going to suggest you talk to at least 3 or 4 lenders who are experienced construction lenders. in my experience so far, I've talked to 3 folks so far, and one kind of stands out. He got back to me very quickly. We've already kind of established some exchange, but I think you're going to be very comforted by the process, and this should be your first step. Contact these folks, get a basic over the phone pre-qualification, and see how things go. See what you get qualified for. And then what you need to do is simply adjust your shopping to that limit of how much you can get financed. Now, in my case, I've run my numbers by this guy, and what I'm shooting for, he tells me there shouldn't be any problem. So we're in the process of filling out the longer amount of info. And as I go through this, I'll give you updates. Now, this is the first time I've ever been the buyer on this in this kind of transaction. I've helped folks find lots in the past where they've done this, but really my participation in the process ended once we found the property and they purchased it. And I stayed in contact with some of these folks and visited and, went to the housewarming party when it was all done. But I didn't actually have to live through the day-to-day of doing this. So by going through this process, I'm hoping I'm going to be able to give you some insights. And the goal here is for you to feel comfortable with it. Now, do I feel a little antsy about this? Yeah, even though I've got 25 plus years experience doing this stuff and doing things in real estate, this is different. This is a different animal for me. So I get where folks' concerns come from. But I honestly think that by exploring this together, we're going to increase your options in terms of what you might want to invest in or how you might acquire your very first home. So I'm hoping this will be a great experience, not just for me, but also for you. All right, folks. And again, we'll do updates, and we'll probably spend a little bit more time this week exploring other things that might be attractive to you in terms of setting your real estate goals. And we'll see if we can't help pave the way. Now, one thing I'm asking for from my listeners is, now that you've gone through last week's steps and you've established your goals, I would love for you to share your goals with me. So if you could head on over to therebelbroker.com, use the Contact the Rebel Broker link in the upper right-hand side. Just let me know what your goals are. Let me know, particularly if you're having trouble with your goals. You've set your bigger goals, but setting those smaller steps, those micro achievements to achieve your bigger goals, you're having trouble figuring those out, let me know. Let me know what problems you're having, and I will be happy to try and work those out with you. And in a lot of cases, maybe we can work them out on the show so that folks who are having similar problems can benefit from your experience. And of course, if you are enjoying the show, no matter how you consume it, please head over to Stitcher or iTunes or whatever tool you use to consume the show. Give it a thumbs up or a review. That will help grow the show. And as far as one of my goals is concerned, that's absolutely one of my goals, is to grow the footprint of the show and get more folks listening. Thanks again, everyone, and I will talk to you next time.